Hello there. No, I'm good. Uh, I'm Mark Sebastian, founder of OptionPit.com, and this is the Option Pit Volatility Stock Market and Option Volatility Report reminder. This is for education purposes only. Shouldn't be considered investment advice. Option have risk. Hey, tonight at 9 Eastern Time, managing risk using options with me, Mark Sebastian. Go to optionpit.com/risk 2019 to get yourself registered. It's going to be a good webinar. Make sure you get yourself registered. Speaking of getting yourself registered, how about this market? And we are at, after a pretty decent sell-off, we're flat pancakey right now with the market basically kind of not doing much, spinning its wheels. VIX futures are off, but the VIX itself is up. Why? Well, we've got a lot of earnings coming up. Apple is after the bell. Microsoft is tomorrow after the bell. Amazon is later in the week. Facebook is tomorrow after the bell. The only one next week is Google right now. Everything else, all the major companies are kind of this week. ExxonMobil is on Friday. CVX. So we'll have almost the top 10 of the S&P done by, what essentially amounts to Friday. So there's a lot of earnings to come out of this market, and that's kind of what's driving stuff. So what does that tell us about what VXXB is doing? Well, it tells me the market does not see a lot of volatility out of these earnings. It tells me that, with the SPX around 2640 to 2650 is probably where it's going to sit for the next couple days. And expectations for the VIX are that it's going to come down, not go up. Looking at some individual names, we had some pretty decent mishmash of earnings the last couple of days. So all the indexes look like they're going to spin wheels all day. I'm interested in, whether, on some of this market softness, it's worth it to look to sell some puts or do something like that, because I think there's going to be some pressure on volatility. I'd be a vol seller. Digging into Apple itself, they have earnings coming, as I said at the top, they've got earnings coming up. Let's look at that skew for earnings today. And I'm just going to briefly tell you about, look at that curve. There's pretty decent vol bid. If I go to kind of regular Feb, you get a better look. And you can see that kind of upside and downside are all bid. And there's a lot of premium bid to the downside. Honing in on that straddle, Apple is right around 157, and they're looking for almost a $9 move. Call it an call it a $8.50 move out of Apple. That's a decent move. That's call that 5%. I think that's a level that maybe makes some sense based on where they've warned. My gut is bullish on this, and playing bullish is not very is relatively inexpensive compared to hedging on the downside. If I was looking to do some downside hedging, I think I'd want to use a put spread of some kind or a put fly because of how expensive downside implied volatility is. And on upside, with implied volatility getting more and more bid, I think there are, again, some inexpensive butterflies that could be constructed. Other than that, again, I'd remind everybody that I've got this webinar and I want you guys to come. I hope everybody has a great day. And you got questions, you can email me, mark@optionpit.com, or call me 888-TRADE-01. Have a good one.